Okay, and welcome back, students who are taking financial accounting, working on the Chapter 1 problems, the Group B, and we're still working on problem P1-37B. And let's see, in the last video, we had completed the statement of retained earnings. So we completed number 3, and now we're left with only doing the balance sheet, and then it's at June 30th. All right, so let me get down to the next slide. So notice the order we did them, all right? We did the income statement, then the statement of retained earnings, and now we're finally getting to the balance sheet. Don't try to do the balance sheet first just because you see, assets listed as the first ledger accounts, right? All right, so our heading, Interiors by Jill Inc. And then of course the name of the statement, which is the balance sheet. And unlike the income statement and the statement of retained earnings, the balance sheet is not for a period of time. All right, it is, it is as of a specific date. In this case here, the last day of the accounting period. So as of June 30th, 2014. Now you can, and what this means is it's showing the balances in the account as of that specific date, because remember, these are cumulative balances. They never get closed out to zero. Now I could have, I can write the words as of, and I also could just write the date itself, okay? Both are acceptable. And of course, this gets centered, right? Now, just like with the income statement and the statement of retained earnings, if you understand the structure of the financial statement, it becomes relatively easy to format, okay? You can start out by writing your assets over here, and then you have liabilities here. And I'm going stockholders' equity here. Now I abbreviated the stockholders' equity, okay? That's the structure. So now underneath assets, okay, and this, these headings can be center aligned, can be left aligned, or be center aligned in the column. All right, they don't have to be completely flush left. But underneath the categories of accounts, we're going to start listing our general ledger accounts. So we know we have a cash, we have an accounts receivable. Remember, write the words out. I'm only abbreviating for the financial statement, for doing this because to save time. And it's my own personal thing. But if I'm going to turn it in for a test or it goes to someone else, you're writing out the words accounts receivable. You're not writing out the word, you're not abbreviating A/R. Right? Supplies, equipment. Okay, and those are all of my accounts, so I know that I'm going to have a mathematical calculation because I'm going to have total assets. And I know that's a double underline underneath that. For my liabilities, I have accounts payable. And again, write this out. Now, because I only have one account here, okay, and I know that I have, I could write total liabilities here, but all I would end up doing is, in this accounts payable is $850. Well, if I only have the one account, I would end up drawing an underline underneath it and writing the 850 because it's not adding anything to anything to get my total liabilities. So I don't need to actually write out the words total liabilities since I only have the one account. Right? Now, if I had more than one account, let's say I had a notes payable here, okay, and for whatever dollars, well, then I would have to I would write out the words total liabilities, okay, and because I'd be doing a mathematical calculation, I would actually be writing it in this column and then putting just the total amount. So I have 850 here. And I would have whatever that total amount would be here. Okay. That's how that would look if I had more than one account. But that's not the case. All right, I only have the one account for accounts payable, so I can just put that in the rightmost column because that's the total amount of my liabilities. Now with equity, I have common stock and I have my retained earnings, okay, which means I'm going to have a total stockholders' equity. And in this case here, my common stock was 4,700, and the balance, jump up, here's the 47,000, sorry. And for the total retained earnings, that's this 54,310 amount, right? Because why? We're closing out all of the revenue and expense accounts. Right? So this is 47,000, and this here is, oops, sorry, got that wrong. It's 7,310, okay, from our statement of retained earnings. It's not, I misspoke because I'm trying to look at numbers in all different places here. It's not the 54,310. That's my total equity, okay, which is this amount here, 54,310, right? But that's a mathematical calculation between the common stock and retained earnings. Our retained earnings was $7,310, which we got off of our statement of retained earnings, okay? So if you remember in the introductory videos, right, there was a relationship. This was like the income statement, and you had the profit or loss in the income statement, which went down to your statement of retained earnings, okay? And that statement of retained earnings, your ending retained earnings, went on the balance sheet, okay? So there was a flow of information between the statements, and that's what we're looking at here. I mean, I can, as I create the financial statements, I can take the information off of one statement and apply it to the next. We start out with the income statement and we ended up with the 8810. Well, that 8810 then flowed over to the statement of retained earnings right here, okay? Because I'm adding my net income, and then I also have to pull from my ledger accounts my dividends. But the ending retained earnings then comes down and it's going over here on my balance sheet. So that's the flow of the information, right? And since that's my, okay, so that's that. So now I have a total stockholders' equity. And the way that they're presenting it on the solution, they're presenting it all in one column here, because now we have a total liabilities plus my stockholders' equity, which should be $55,160, okay? And that would be a double underlined, right? Now, I realize I didn't fill in my assets just yet, but I want to point out that personally I don't like doing it this way. I mean, it's not incorrect, right? But what I would have done if it was me, so stockholders' equity, what I would have done is I would have, because I'm getting a mathematical calculation here, okay? I would have put my 47,000 here in the left-hand column and the $7,310 here, okay? Drew my underline and then put that 54,310 here, okay? And I have my underline here. This is probably the more appropriate way to do it, right? Why? Because we're following this idea of if we have more than one number that we're adding together to do a mathematical calculation, we go one column to the left and put the solution to the right. So when we're looking at this, it becomes much easier to see that I have my liability, my total liabilities, the 850, plus my total stockholders' equity of 54,310, which adds up to 55,160. Right? And underneath my equity, I can see that I have 47,000 plus 310, which equals my 54,310. Right? So in the book, yeah, you know, as you saw me do it first, I had these numbers here in this column, but I don't like doing it like that. It starts to add in a level of confusion. If you always remember when you're going to add up two numbers, right, you know, move one column to the left and put the total in the right-hand column, so that this way when you're looking down the column, you understand what it is that you're calculating. In this case here, I'm calculating my total stockholders' equity. Well, these are the numbers I'm using. In this case here, right, I'm adding up my liabilities and my stockholders' equity to get my total liabilities and stockholders' equity. Okay. Now, to fill in the assets, I had, and over here you have a dollar sign, and of course a dollar sign here. So for my assets, I have 14,360 for my cash, 8,200 for my receivables, 600 for my supplies, and 32,000 for my equipment. And you can see those here at the bottom of your ledger accounts, the balances in your ledger accounts. It's this, you know, it's this 14,360, 8,200, 600, and 32,000. That's where I got those numbers from. Okay. And of course, the total, when you add up all of those numbers, is $55,160, right? So that makes my total assets equal my total liabilities plus stockholders' equity, right? And that's it for the balance sheet. And that's also it for this particular problem, okay? Before I go, you know, when you look at the solution, all right, you know, there's nothing wrong with the solution. I mean, technically it's following generally accepted accounting principles, you know, but, you know, there's certain preferences. Like I said, I have this preference to do the mathematical calculations, you know, 1/, and that's just me being an accountant, okay, and working on financial statements for cost accounting where there's tons of calculations. And if you put everything all in one column, you know, you're constantly trying to figure out what's going on. But by moving the mathematical calculation one column to the left and putting the solution, you know, in the right hand, you know, the next most right hand column, you know, it makes it so much easier to understand what the calculation is. But if you know, and here, you know, on this balance sheet, you're talking, you know, just a couple of numbers. And remember, we're looking at a high level view of this. You know, this is a 40,000, you know, foot view. But as we progress, things are going to become more and more complicated. So with that said, you know, start becoming accustomed to the process, you know, of creating the financial statements. Try to set in your mind, you know, what to do next, what to do next, what to do next. Kind of like memorize that process, but understand why you're memorizing it. You know, 1, you know, I put the heading. 2, I put the category, right? 3, I will put in the accounts, right, underneath each category. Then 4, I'm doing the math, okay? And of course, then I'm also filling in 5, whatever descriptions I need last, okay? Now, with that said, realize that, you know, this is simplistic. It can get much, much more complicated even on a balance sheet. For example, you know, for those who have had accounting or have heard of it, you know, we haven't dealt with depreciation yet. You know, we haven't dealt with bonds and preferred stock and blah blah blah, right? Notes payable, loans payable, you know, mortgages, you know. So these here, this balance sheet can get to be a lot more complicated, just like the income statement could get to be a lot more complicated. But the retained earnings generally stays the same. Okay, the retained earnings doesn't really deviate that much from what you're doing in this particular problem, right? But like I said, the income statement can get a lot more complicated depending upon, you know, the accounts that you're using. And generally that complication is just more of an additional amount of revenue accounts and an additional amount of expense accounts, right? So it's not that bad, right? But do, you know, try to, you know, work through a set process each and every time, because the more you do that set process, the more it becomes ingrained, the less likely that you're going to deviate from it, and you'll be able to capture everything that you need to. If you just start going at this stuff willy-nilly, all right, you know, just picking stuff and writing it any old which way, you're only going to keep yourself confused, all right? Because you're not going to be doing the same thing again and again and again, and you're going to start missing things, you're going to start making mistakes, all right? So with that said, you know, I'm done with this problem, okay? And let's see here. Yeah, the next problem, you know, well, they're all pretty much the same, where we're going to end up creating a lot of financial statements. So I will see you in the next video for the beginning of problem 1-38.